Hey everyone, in this class we are going to discuss about the RBI circulars for January 2026 month, and this is the part 2. Part 1 is already out. This will be the part 2 video. Okay, so let's start the discussion. Let's start with the modified interest subvention scheme for the short term loans for the agriculture and allied activities availed through Kisan credit card during the financial year 25-26. Okay, so this is regarding the modification in the interest subvention scheme for the short term loans. Okay, so this is for the short term loans availed via Kisan credit card, and this is for financial year 2026. So let's start the discussion, guys. The very first thing is government has approved the continuation of the modified interest subvention scheme. What is modified interest subvention scheme? Where the banks are giving the loans and advances to the farmers and to other category of the borrowers at subsidized rate, I can say, plus at the same time the interest subvention schemes allow the banks to get compensated from the government of India here. So the government has again approved the continuation of the modified interest subvention scheme. So we used to have a scheme MISS, modified interest subvention scheme, and it will be continued, right? But with the following condition for the financial year 2026, because this is the new financial year, we have changed some rules and regulations here and some rates here. So here we can see the short term crop loan and the short term loans for allied activities. So it can be a crop loan, it can be loan for some allied activities as well. What are the allied activities? It can be animal husbandry, it can be dairy, it can be fishery, it can be even beekeeping, right? There is a list of allied activities. So you'll be getting interest rate related benefit in this particular scheme if you are taking a short term loan for crop purpose, or if you are taking a short term loan for any allied activity. Okay. So up to an overall limit of 3 lakh rupee to the farmer through KCC. So limit through KCC is 3 lakh rupees. Okay, this is the limit, and you will be getting this loan at a concessional rate during 2026, right? So this is the criteria here. So here we can see that it has been decided to provide interest subvention to the lending institutions like public sector banks, like private sector banks and so on use of their resources. So this interest subvention will be calculated on the loan amount. So whatever loan the farmer has taken for the crop loan, for the allied activity, definitely it will be calculated on that amount only. From the date of disbursal, whenever you have given the loan, right, up to the date of actual payment. So whenever you are going to pay the loan, let's suppose you have taken the loan today and you have repaid the loan after 3 months, for example, right? So this is the actual date of repayment, and let's suppose the loan tenure is only of 2 months, then whichever is earlier is the timeline. Obviously the loan tenure will not exceed the stipulated time period. Okay, so for the financial year, what you have to remember here is the lending rate to farmer will be 7%. Okay, the lending rate to farmer will be 7%. The rate of interest subvention to the lending institution will be 1.5%. 1.5%. So definitely the government will compensate the lending institutions by 1.5% here, plus an additional interest subvention of 3% per annum will be provided to those farmers who are repaying in the time, right, who are repaying within the due date. Then in that case you will be getting an interest subvention of 3% per annum to such kind of farmers. But this concession, this additional interest subvention concession is for the loans subject to the maximum period of 1 year from the date of disbursement. So let's suppose today is your disbursement, then it can the maximum period can be only up to 1 year. If you are repaying within the time frame, right, within 1 year also is the capping, then you will be getting additional interest subvention of 3%. This is the case here, right? So let's start this circular, guys. This is the circular which relates to the continuation of the modified interest subvention scheme for 2026, specifically for the short term agriculture and allied activities. Okay, the whole idea is to make short term credit more affordable to the farmers, right, support the allied activities as well, plus encourage timely repayment, and that's why you can see there is an additional interest subvention of 3% if you are timely making the payment, right? So public sector banks, private sector banks, small finance banks and PCS are also covered here. All these institutions are covered. The overall capping is 3 lakh rupees per farmer per year. Allied activities do have a sub-limit of 2 lakh rupees. Okay, allied activities do have a sub-limit of 2 lakh rupees. Let's suppose a farmer is involved in crop related activities as well as allied activities. So out of this 3 lakh rupees per farmer, max 2 lakh rupees can be allocated to the allied activities. Max 2 lakh rupees will be allocated to the allied activities and crop will be given a priority. Sir, what do you mean by crop will be given a priority? Say for example, the crop loan is of 2,50,000 rupees, right? The crop loan is of 2,50,000 rupees. So the farmer has utilized this loan 2,50,000 for crop and say for example 1 lakh for the allied activities. Then in that case the total limit is 3 lakh only. The total limit is 3 lakh only. 2.5 I will first apply to crop. Why? Because the crop will get a priority. The crop loan will get a priority in this. So first out of 3 lakh rupees I will first apply 2,50,000 to the crop and rest of the balancing figure 50,000 rupees I will apply to the allied activity. Right. So this is the concept and that's why we say that crop loans will be getting a priority. So this will be the priority level 1 and then maximum allied activities can be up to 2 lakh rupee. Maximum allied activity can be up to 2 lakh rupees. Say for example, you have done allied activity for 2,50,000 and the crops were only 50,000. So first you will be giving the priority to the crop loan 50,000 and then 2.5 lakh allied activity, but there is a sub limit of 2 lakh rupees. So there is a capping. So totality on a totality basis 50,000 you will be getting for crop. Rest of the 2 lakh you will be getting for the allied activity instead of 2,50,000. Right. So the base rate lending will be 7% per annum, but government will be giving the banks 1.5% per annum as the interest subvention. Okay. So this is nothing but a compensation to the bank because the bank is lending at concessional rates. So here the government will be compensating these banks. Then there is a prompt repayment incentive as well. If the farmer is repaying the loan on time basis, then in that case additional 3% benefit is there, but it is valid only for maximum 1 year period. Okay, it is valid only for the maximum 1 year period, 1 year from the date of disbursal. If the farmer is able to pay within the time limit, within the cap of 1 year, then you will be getting additional benefit of 3%. Let's suppose we are able to source the loan at 7%, then 3% is the additional benefit because I have paid the loan on a timely basis, then 4% will be my total expenditure here as a farmer. Okay. So again a great scheme guys. We have done the overall limit of 3 lakh plus there is a sub limit of 2 lakh as well, plus crops will be getting a priority in this. Right. Next one. In order to discourage distress sales by farmer, let's suppose I have some agriculture produce but nobody is there to buy it. Now if I am not able to sell my produce, then in that case I need to do the distress sale, right? I need to sell my produce in a stress manner, right, at lower prices. So this is a very common case, and in order to discourage this distress sale by the farmers and to encourage them, I can even store my produce in warehouses, right? Rather than selling my produce at a much cheaper prices, it's better to store my produce in warehouses, right? And the benefit of interest subvention will be continued in the KCC, will be available to the small and marginal farmers for a period up to 6 months post harvest, right? So let's suppose I have harvested the crops, then in that case for a period up to 6 months I can store that produce in the warehouses and I can still get the benefit of interest subvention under the KCC. So this is going to be an amazing update guys here, right? So of the crop against negotiable warehousing receipts on the produce stored in warehouses. So whatever produce you are storing in the warehouses, you will be getting a negotiable warehouse receipts as well for that. So it is nothing but a legal document issued by the WDRA, right? WDRA, what is WDRA? Warehousing Development Regulatory Authority. So if I have stored some of the agriculture produce in the warehouse, WDRA will be giving me a negotiable warehouse receipt. And as the name says it all, basically I can I can just transfer it as well. Why? Because it is completely negotiable, right? So it's a instrument which I can just transfer. So this is the proof that your goods are safely stored in the warehouses, right? So it can be transferred, it can be stored, it can be even pledged, or it can be used as a security for the loan. So the point to be noted here is period up to 6 months post the harvest of the crop against the negotiable warehousing receipt on the produce stored in warehouses, right, are also eligible for the benefit of the interest subvention under the KCC, right? Now, in case of the natural calamities, again the interest subvention for the first year for the restructured loan. Let's suppose because of the natural calamity, we have requested for the restructuring of the loan. Now, on that restructured part as well, you will be getting interest subvention benefit for the first year. Then after that, the normal interest rate will be charged on that restructured loan after the period of 1 year, right? But if it is a case of severe calamity, even the interest subvention can be given, can be provided up to 3 years. Okay, in certain cases, it can go up to maximum 5 years as well on a case-to-case basis. And prompt repayment initiative incentive is also available 3% on this particular restructured loan. But this is totally decided by the high level committee, right? So definitely the severe calamity and the normal calamity benefit is also available here. Okay. So in case of natural calamity, if it is a kind of normal calamity, then for 1 year you will be getting the interest subvention. Then from the second year you have to pay the full interest. In case of severe calamity, there are even better benefits available, right? Then Aadhaar and KYC requirement is there. Aadhaar card, Aadhaar seeding is required. Aadhaar authentication required. Aadhaar seeding means nothing but your Aadhaar card is linked to some external websites, right? Then if you don't have any kind of Aadhaar card, then in that case no scheme benefit will be available. For multiple KCC amount, so for multiple KCC accounts, the farmer can have multiple KCCs, but the total benefit is limited to 3 lakh rupees. So it's not like that you are having 2 KCCs, then the limit will be doubled to 6 lakh. It's not like that. Okay. And these are the summary pointers, guys. Basically, you have to remember the percentages and the time limit here in this particular circular. Can be an important one. Next is related to again interest subvention for the pre and for the post shipment of the export credit under the export promotion mission, which is nothing but Niryat Protsahan. So this one we have covered in the finance current affairs series as well. What do you mean by pre-shipment? As of now, I haven't shipped the goods and services. I am an exporter, right? I am an exporter. So what do? I manufacture some goods or I source some goods and I export it as it is, right? I export it as it is outside my country. So there is a pre-shipment and there is a post-shipment activities. What will be my pre-shipment activities? First, I have to source that raw material. I have to manufacture that. If not, I can directly source that finished goods. So again, I need some money in order to do business, right? For the pre-shipment activities, I need some money. Even for the post-shipment activity, it's not like that you have sold the goods, you have exported the goods and you will be receiving the money right now like this. No. So that's why still there are working capital needs even after the post-shipment, right? So this is the interest subvention for the promotion of exports. So in India, we do have a export promotion mission, Niryat Protsahan. So here we are getting interest subvention benefit. So if you are an exporter, even for the pre-shipment activities, even for the post-shipment activities, you will be getting export credit, that too at a discounted rate, right? So the rate of interest subvention here will be 2.75%. 2.75% is the rate of interest subvention which government has allowed you. So let's start with the operational guidelines. RBI has released the operational guidelines. You don't have to study these guidelines in a very detailed manner. It's close to 100 to 200 pages. So better to cover it in a summarized manner from this particular series. So RBI issues operational guidelines on the interest subvention for export credit under Niryat Protsahan. Please do remember this name of the initiative, Niryat Protsahan, very, very important. I have covered it in the finance current affairs session as well. So here it is all about extending the interest subvention on the pre-shipment and the post-shipment to the exporter under the export promotion mission. So this scheme aims to reduce the cost of micro, small and medium enterprises. Basically, it is for the benefit of the MSMEs, right? It is for the benefit of MSMEs. So interest subvention is nothing but a subsidy right? Let's suppose you are getting a loan at 10% and somebody is giving you an interest subsidy of 2.75%, then that means 10% minus 2.75% will be your effective interest rate. I told you that this is going to be applicable on the pre-shipment as well as the post-shipment. You will be getting credit, you will be getting loans and advances for all the types of activities, right? So this is going to be definitely lower the cost for the MSME exporters, and these are the lending institutions which are eligible. So all the scheduled commercial banks excluding the RRBs, obviously RRBs are for the regional rural development, not for the exports here. Then primary cooperative banks, state cooperative banks, all India financial institutions, all are eligible here. And eligibility criteria for the MSME exporter: if you are a MSME involved in manufacturing, or even if you are a merchant exporter, you need to have a valid importer exporter code. You need to have a valid importer exporter code. You need to have a Udyam registration number as well, and then you can participate in this particular scheme. So guys, here the interest subvention percentage will be 2.75%. So let's suppose you are getting a loan at 10%, you will be getting interest subvention as well, 2.75%, and your net interest cost will be 7.25%. Okay, but the maximum cap is 50 lakh rupees per MSME, right? In case of farmers, it was 3 lakh rupee. In case of exporter, definitely export is a cash rich business. You need good amount of money to do exports as well. So the maximum cap is 50 lakh rupees per MSME exporter. Okay, so this is the concept of interest subvention on the export credit. Next one, RBI has given a in principle approval to the Sumitomo Mitsui Banking Corporation, SMBC. This is a Japanese bank, for setting up a wholly owned subsidiary in India. So this entity can have a wholly owned subsidiary in India. What is a wholly owned subsidiary? That means this entity ka 100% equity stake is being owned by SMBC. So RBI has given the approval to the bank. Okay, so in the RBI circular series, we also do cover the important updates and the RBI website related news as well. So I am just taking some of the RBI related news and press releases. Okay, then we'll be moving to the next circular. After that, guys, on 27 January, RBI has conducted a 90-day variable repo rate auction under the LAF facility, right? So this is just there to infuse the liquidity in the banking system, and I have already created a separate video for these kind of transactions through which RBI has injected liquidity into the system, right? So this is nothing but an auction process, variable repo rate auction. So banks will be definitely placing their bids if they want to take money on the basis of VRR, right? So RBI will be injecting the money, but this is the auction based mechanism. The bank which is offering the highest interest rate will be getting this fund. Okay, and the tenure will be 90 days. So this is a kind of short term infusion of liquidity measure by Reserve Bank of India. Next, Reserve Bank of India has also announced the WMA advances for the state governments and union territory. What is WMA? Ways and means advances. What is WMA? Ways and means advances. So this is a kind of loan facility. This is a kind of OD facility. So let's suppose you are a state government, you are having certain temporary cash flow mismatches. What do you mean by temporary cash flow mismatches? For example, a state government thought that it will be receiving money in January, 1 lakh rupees for example, right? Once it receives the money in January, in February, the state government will be paying 1 lakh rupees to someone else. Okay, so this is an outflow, this is an expected outflow, and this is an expected inflow. But the problem is, what if this expected inflow never happened in January? This is delayed. Say for example, this is delayed. Now the problem is, I do have an outflow obligation as well. I have to pay the money in February. No matter I am not receiving the money in January from some entity, but I have to pay the money to another entity in February, the same 1 lakh rupees. So this becomes a cash flow mismatch. And in order to fill this cash flow mismatch, we do have the ways and means advances. This is a temporary loan facility that we can take. We mean state governments and union territories can take from the Reserve Bank of India to manage the short term crunches, right? So this limit will be here against here will be 61,000 8 crore against the existing limit of 60,118 crore. Okay. So this was just a quick update. Next, there was the first meeting of the payment regulatory board. Okay. So first meeting of the payment regulatory board was held in Mumbai under the chairmanship of the RBI governor, right? So again, we have discussed the payment regulatory board structure in a very detailed manner. It's a new statutory body of the Reserve Bank of India to regulate and supervise the India's payment system, right? So we are having a very good payment system in India. We have an amazing payment system in India, and it is going at a quite faster rate. And for that, we need a strong regulatory statutory body here. And for that, we have framed the payment regulatory board, right? So we have discussed already this payment regulatory board in a very detailed manner. So I'm not redoing it again in this particular video. Okay. You can watch the YouTube video related to the payment regulatory board, which is already posted, right? It is covered in your course as well. Next is guys related to the internal ombudsman. Okay, so these are the RBI internal ombudsman directions. So they are for commercial banks, small finance bank, and so on. For every institution, RBI has already released the internal ombudsman. Okay, this is not integrated ombudsman, this is internal ombudsman. So the whole idea is ensuring every customer complaint is properly reviewed before rejection. So let's suppose I'm a bank, right? Now I'm rejecting a complaint. Some customer has complained about my processes, about any problem that he or she is facing. Now we are rejecting it, right? Now we are rejecting or we are resolving it. In both the cases, at least it needs to be properly reviewed that the before rejecting or resolving a complaint, whether everything is done in a meaningful manner or not, whether everything is done quickly or not. So we do have an apex level authority inside the bank as well. It's not like that always the case will go to the integrated ombudsman, right? The RBI IOS. Rather, let's try to resolve the matters internally only. So every bank is having an internal ombudsman also, right? Earlier we used to have the guidelines of internal ombudsman 2023, but now RBI has released the internal ombudsman direction 2026. So these are the new directions. Let's talk about the applicability. These directions is going to be applicable on all the commercial banks, right? Having 10 or more banking outlets in India. If you are a commercial bank, if you do have 10 or more than 10 banking outlets in India, then in that case, this particular direction is going to be applicable on you, right? So it includes Indian banks, foreign banks operating in India, right? And SBI as well. And these banks, right, cross the threshold later on. Let's suppose it's not like that the bank is crossing the threshold as on 31st March 2025, but later on after 31st March 2025, any bank has crossed the threshold of 10 or more banking outlet, then in that case, you need to comply within 6 months. Within 6 months, you need to comply with this particular provision. And it does not apply to the banks under resolution or winding up. So this is the applicability part, guys. You can check from the circular as well. So I have pasted the screenshots of the circular as well for the detailed understanding. So internal ombudsman is nothing but an independent senior officer, is an independent senior officer who is going to review any kind of rejected complaint or partially resolved complaints. So if complaint is fully resolved, then no worries at all. Everything is fine, win-win situation. But if it is a rejected complaint, independent senior officer is going to check it, is going to review it. If it is partially resolved, independent senior officer is going to check it. Independent senior officer is going to check that partially resolved complaint, right? There will be a deputy internal ombudsman also, which is going to support the internal ombudsman, right? So deputy internal ombudsman, obviously we do have to support the internal ombudsman. So internal ombudsman is going to be the higher authority, obviously. Appointment of the internal ombudsman. Who can be appointed as an internal ombudsman? So it must be a retired officer or maybe a serving officer, which is equivalent to come se come RBI general manager or any financial sector regulator with minimum 7 years of experience in relevant areas like banking, regulation, payment system, consumer protection, and so on. So 7-year requirement is a must, and the level should be equivalent to the RBI general manager or financial sector regulator. So you can understand the depth of the person who is going to become the internal ombudsman here. If serving, must be resigning from the previous role as well. Let's suppose he is still an officer in RBI or financial sector regulator, then in that case he need to first resign from its existing role and then only he can join as an internal ombudsman. Cannot be an ex-employee of the same bank. So let's suppose SBI Bank is appointing an internal ombudsman, it cannot be the ex-employee of the SBI Bank, okay, or even the group companies. So even if it is the ex-employee of SBI Life or any other SBI mutual fund and so on, not allowed. Age limit, maximum it should be below 70, okay. If it is below 70, then that's fine, not above or equal to 70. Every bank has to appoint at least one internal ombudsman. So it's a responsibility that every bank has to appoint at least one internal ombudsman, okay. Then guys, talking about the deputy internal ombudsman must be equivalent to the deputy general manager. So internal ombudsman was equivalent to general manager, and for deputy internal ombudsman DGM भी चलेगा with experience of 5 years. So वहाँ पे experience requirement was 7 years and here the experience requirement is 5 years. So that is the bare minimum limit that at least एक तो होना ही चाहिए, but bank board is going to decide about the number of internal ombudsman and deputy internal ombudsman required on an annual basis based on the complexities and based on the volume of the bank, right? If I talk about tenure, minimum tenure will be 3 years, maximum tenure will be 5 years. And RBI must be informed within 10 working days if any vacancy arises. Let's suppose removal before the tenure happens or maybe the person has resigned. So in that case, RBI has to be informed within 10 working days, right? So can the customer complain directly to the internal ombudsman? No. There should be a proper structure. So the customer will be filing the complaint to the bank only, and the bank is going to forward the complaint to the internal ombudsman. So they do not accept the complaints directly from the customer, right? So this is not a public dealing department. The customer has to first file the complaint to the respective bank only, and then the bank will be forwarding the report to the internal ombudsman. They only review the complaint already examined by the bank but partially resolved or rejected. This we have already discussed, plus they can't represent the bank in the court, right? So integrated ombudsman scheme is completely different guys as compared to the internal ombudsman. This is an internal matter, right? If you are not able to resolve the matter internally, then definitely if you are not satisfying the customer within the stipulated time limit, then in that case the customer will definitely move to the RBI integrated ombudsman scheme for taking the complaint ahead, right? But this is an internal ombudsman, not an integrated ombudsman scheme wala person, okay? So cannot represent the bank in the court of law, can recommend definitely compensation, and quarterly analysis of complaint will be done to identify any kind of root cause analysis and so on. Some of the complaints that are internal, which are staff related salary matters, matters already pending in the court of law, or corporate fraud cases not affecting any kind of consumers, or maybe pure commercial decisions that the bank is taking, right? Let's suppose the bank is acquiring a company, right? A bank is acquiring a company. In that case, there is no role of internal ombudsman, and these kind of things will be excluded from the scope of internal ombudsman, okay? So these are the guidelines basically of the internal ombudsman. You have to just quickly do the reading of it, okay? Next one is related to the export and import of goods and services. So there are certain changes that we are going to discuss about the import and export here, okay? FEMA Export and Import Goods and Services Regulation 2026. So now we do have new regulations related to import and export of goods and services, and they are going to be applicable from 1st of October 2026. This is important. So let's discuss about some of the important stuff from this particular circular. The very first thing is related to the export declaration requirement. If you are an exporter of good, what do you mean by exporter? You are selling the goods in advance. You are selling the goods from India to a country outside India. Let's suppose I'm an exporter. So from India, I sell my goods and services to US. Then in that case, EDF, export declaration form, there is a form. It needs to be filed. It needs to be submitted at the time of export, right? So whenever I am making the export, I have to first file the EDF. the export declaration form. This is a mandatory declaration in case of export of goods and services. So, in case of export of goods, I have to submit it at the time of export. In case of export of services, the EDF has to be submitted within 30 days from the end of the month of invoice, right? Let's suppose my invoice was raised in February. So, my Feb end say within 30 days, I can file the export declaration form. That is also fine. Okay. Then, so this requirement is important when to file the EDF. In case of goods, you can file it when you are exporting the goods, but in case of services, it needs to be submitted within 30 days from the end of the month. Okay. Next is a very important stuff related to the time limit for realization of the export proceeds. So, I have sold goods outside India, I have sold services outside India. There is a time limit within which I have to realize the export proceeds. That means, let's suppose I have sold goods worth ₹1 crore outside India. In that case, I need to realize that 1 crore within a period of 15 months from the date of shipment. In case of services, 15 months from the date of invoice. Okay, so this is going to be important. Warehouse export, 15 months from the date of sales. Right. So, these are the requirements. So, 15-month criteria you have to remember, important for the examination. Okay. Time limit for realization of export proceeds. If the invoices are settled in INR, if the invoice amount is in INR, let's suppose in this case, it was, for example, $1 lakh. That's the settlement amount. Now, 15-day time limit will be applicable. But if here it is, let's suppose 1 crore rupees, 1 crore in INR terms, then because the invoice is going to be settled or settled in the INR, or maybe the invoice amount is in INR, then in that case it is extended to 18 months. So, this is a benefit because you are doing a transaction in INR. So, this results in internationalization of INR also. Okay. Then reduction or non-realization of the export value. The AD bank may also reduce the realization of the exporter given the genuine reasons. For export value up to 10 lakh rupee per invoice, shipping bill, exporter declaration itself is sufficient. So, this is regarding the reduction or non-realization of the export value. Here the AD category bank can definitely provide certain relaxation, and if the export value is just up to 10 lakh rupee per invoice, then in that case you just have to file a declaration. Again, this update is very important. No advance remittances allowed for import of gold and silver. So, let's suppose if you want to buy gold and silver, okay, from any foreign country, no advance remittances are allowed. You can't pay in advance to a party outside India in case of gold and silver import. So, this is a recent update that government has released. Next is the update related to temporary overseas surplus. When you are getting some temporary overseas surplus, you have some surplus from the project export, you can invest it in the short term instrument as well. And by the short term instrument, I mean that less than 1 year maturity, basically money market instruments. Merchanting trade transactions, MTT, important. The MTT, let's suppose I am buying some goods from China and I am selling it to US, right? So, I am buying some goods from China and I am selling some goods to USA. Now, this falls in the category of merchanting trade transactions. So, there will be a gap. I have to pay China, I have to pay the party in China, and I have to receive the money from the person in the USA. Now, the gap between the outward remittance, what do you mean by outward remittance? This is the outward remittance when I am paying to a person in China, and the inward remittance, this is the inward remittance. I am getting money in India from a person from the USA. So, this gap should not exceed 6 months. Extension is possible, but this gap should not exceed 6 months, right? So, payment must go to the overseas seller and the receipt from the overseas buyer only. So, third parties are not allowed, third parties are allowed, but you have to take the approval. So, you will be directly paying to the party in China and you will be directly receiving the money from the entity based in USA. Okay. So, this is the requirement, and definitely all the reportings related to export will be there on the EDPMS, and related to imports will be done on the IDPMS. So these are the systems through which you need to report the data to the Reserve Bank of India related to export and import, right? So reporting obligations will definitely be there. The AD category bank will be uploading the export import data within the 5 working days on these platforms. Okay. So guys, only those things you have to learn that I am telling you in this particular circular. Otherwise, this circular is a very detailed circular. If you are able to understand these things, then that will be fine. You are quite sorted in terms of this particular circular. Then the PSL target and classification amendment direction was also there, and I'll advise you guys to please cover this PSL lending target and classification from the amendment direction, which I have released separately. Now this is a 1 hour video. Okay, this is a 1 hour video. So that's why it is a very detailed one, and PSL norms are quite important for the examination perspective as well, right? So you can cover those amendments from this particular video. Next one is RBI Commercial Bank Cash Reserve Ratio and Statutory Liquidity Ratio Amendment Direction. So this is just a quick amendment. So here no changes in CRR or SLR requirement is there for the commercial bank. It is just a technical amendment. Okay. So RBI has actually amended the earlier CRR and SLR directions. Why? Because Banking Laws Act was amended. Then RBI scheduled bank regulations were amended. New development financial institutions are also now formally recognized. So RBI has also aligned the CRR SLR framework with the new framework. So what is the change number 1? The very first thing is DFIs are formally included now. Earlier only NABARD and EXIM were mentioned. Now RBI says that banks can treat the deposits placement with all the notified development financial institutions. So these will include EXIM, National Housing Bank, SEBI, NABFID for the infrastructure, or any other DFI which is notified under the Reserve Bank of India Act, right? So RBI basically expanded the list from just 2 institutions to all the recognized DFI. This is the number 1 change. Number 2 change, cash in hand is removed. So earlier banks could show some amount as cash in hand for the reporting purpose, but RBI has deleted the cash in hand from that particular clause, and this tightens the reporting and avoid the ambiguity, right? So old names are replaced here, right? EXIM Bank, National Housing Bank, SEBI, NABFID and other DFIs, right? And certain new terminologies are added here, plus a new line has been inserted that the amount deposited with RBI under the standing deposit facility, this now is explicitly recognized in the reporting purpose. Okay. So I will say merely it is a kind of a circular which is close to the reporting requirements and disclosure requirements of Reserve Bank of India, right? So not so important for the examination perspective. Okay. So guys, we have covered all the circulars. Please do watch the first part. Please do watch the PSL norms wala video as well, right? So thank you so much for attending the session, guys. See you soon in some other video. Okay. Take care.